In this segment, we are going to discuss the cash budget portion of the master budget. Once all of the budgeted revenues and expenses that we budgeted within the operational budgets have been completed, the financial budgets are then prepared. The financial budgets really begin with the preparation of a capital expenditure budget, which plans for the needs for purchases of property, plant, and equipment, or other large capital purchase plans. With those in mind, we can then prepare the financial budgets. Let's take a look at the cash financial budget. What the cash budget does is it plans for the expected amount of cash receipts and the expected amount of cash disbursements for the upcoming budget period. The first step of preparing the cash budget is to calculate the budgeted amount of cash receipts. Because remember, the cash budget plans for cash inflows and cash outflows. So first, let's figure out how much ABC is planning to bring in cash during their budget period. So let's assume that 40% of ABC's sales are all done in cash. The remaining 60% are credit sales. All of their credit sales are collected in full in the month following the sale. So let's prepare the amount of cash expected to be received by ABC for our budgeted period. Here are the budgeted sales, which comes from the sales budget that was prepared in the operational budgets. We also know that the amount of accounts receivable expected at the end of each of these months are listed here. So now we can calculate the amount of cash that ABC expects to receive during the month of October. Budgeted sales for October are $100,000. 40% of those will be received in October as cash sales. The other $60,000 or 60% will be received the following month. That means during October, we will receive $40,000 in cash from the current month's cash sales, plus we will receive 60% of last month's credit sales. September sales were $70,000, $42,000 or 60% were on credit, and all of those credit sales are budgeted to be collected the following month in October. That means cash collections are budgeted to be a total of $82,000 during October. For November, November cash will be received 40% of the current month's sales, 40% of $80,000 or $32,000. The other 60% will be received the following month, but we will receive 60% of last month's sales in November. Thus, November's cash receipts, 40% of current month's sales, 60% of last month's sales, $92,000 cash expected. Finally, for the last month of the budget period, December. In December, we will receive 40% of December sales, 40% of $140,000 or $56,000. We will also receive last month's credit sales, or $48,000 of November sales will be collected in December. So we now have the amount of cash budgeted to be received for the period we are budgeting. Once cash receipts have been budgeted, we are then able to calculate how much cash we expect to be dispersing each month within the budget period for the purchases of merchandise. Assume that when ABC purchases merchandise, it's done entirely on account. Full payment for those purchases is made the following month. We are going to begin this budget period. We're going to begin October with a September 30 balance in accounts payable of $58,200. Thus, in planning for cash that will be spent for purchases, October, we will be paying all of last month's purchases. We are ending September, beginning October with $58,200 of accounts payable from September purchases. Those will all be paid in October. In November, we will be paying for all of October purchases, which, coming from the purchases budget that had been previously prepared, $49,200. And finally, December's cash disbursements for purchases will be all of November, or the prior month's purchases that were on credit, $80,400. Again, this comes from the purchases budget previously prepared. Now, with expected customer cash receipts and purchases cash disbursements calculated, we are able to prepare the full cash budget. ABC will begin the budget period with a cash balance of $20,000 from the end of September, and they have an agreement with their bank for loans at the end of each month that gets them up to their minimum required cash balance of $20,000. ABC is budgeting to pay a cash dividend of $3,000 in November. They expect to spend $25,000 of cash for purchase of equipment in December. They have an income tax liability of $20,000 from the previous quarter that will be paid in October. They repay any loans if they have an anticipated cash balance exceeding $20,000. And they pay an interest of 1% of the prior month's ending loan balance. Currently, ABC owes $10,000 on this loan arrangement as of September 30th. ABC has a 40% income tax rate and will pay taxes for the current quarter next year. So pulling this all together, a cash budget is really in two parts. We have the amount of cash we start with, plus what we add to get the cash available. Then we subtract out everything we expect to spend cash on to come up with a preliminary balance. So let's start with October. We anticipate starting with a cash balance of $20,000. We budgeted, when we calculated cash receipts, to bring in $82,000, giving us cash budgeted to be available of $102,000 during October. Then we subtract out everything we're going to budget to spend cash on. $58,200 when we calculated our cash needs for merchandise purchase disbursements. We are budgeting $10,000 and $2,000 from our sales budget for commissions and salaries. Administrative salaries from our general and administrative budget. Income taxes that we have to pay from an income tax liability from prior quarter. We also have to pay interest of 1% on any outstanding loan. Our outstanding loan at the beginning of October was $10,000. We budget to have to spend $100, bringing total cash disbursements of $94,800. We expect to have cash available of $102,000, spend cash of $94,800. We expect to have $7,200 of cash available at the end of October. But recall, we are required to have a minimum balance of $20,000. That means we need to plan on borrowing another $12,800 during October to ensure we have $20,000 of cash on hand. That brings our loan balance from $10,000 plus $12,800 up to $22,800 by the end of October. Now that we have October cash budgeted, we can budget for November's cash. We're ending October with $20,000 in cash, means we're planning to begin November with $20,000 in cash. Now we're going to add in our cash receipts to get cash available during November. Again, this comes from our cash receipt calculations. Subtract all of our cash disbursements, merchandise purchases, sales commissions, salaries, and administrative salaries. We are budgeting to pay a dividend of $3,000, plus we have a 1% on the outstanding balance of $22,800, $228 in interest. Cash expected minus cash budgeted to be spent, we have a preliminary balance of $45,072. Because we are budgeting to have $45,072 in cash, that means we can pay off all of our loan We have sufficient cash. We will pay off the entire $22,800 loan, leaving us with $45,072 of cash at the end of November. We end November with $22,2272 in cash. We are going to begin December with $22,272 in cash. Add in our budgeted cash receipts. Subtract out what we're going to spend cash on. Recall that we no longer have an outstanding loan, so we have no interest in December. But we do have to budget for an equipment purchase of $25,000, meaning we will have to budget for disbursements of $125,900 and a preliminary cash balance of $372,000. If we are budgeting preliminary to only have $372,000, we need a $20,000 cash balance, so we need to budget to borrow another $19,628 to get us to the minimum required cash balance of $20,000. Leaving us with an ending loan balance at the end of December of $19,628. That is the full cash budget.